All right. Good morning, everyone, and welcome to the F8 revision session, Prepare to Pass, arranged by ACCA. My name is Afaf Noor. Just a very brief introduction. I'm an ACCA member and a certified internal auditor. I have been teaching F8 for a very long time, I think over 10 years. I have had the opportunity to meet your examiner on a number of occasions. There was a Learning Providers Conference a few weeks ago. And these examiner conferences happen every 2 years. So a load of information that I will give you today. So things about exam techniques or common reasons for failure. They're a combination of what's up on the website in examiner reports, along with my discussions with the examiner or examining team individually as well. Just to give you a brief idea about how we're going to proceed, a few housekeeping rules. You can type in your questions as we go along. However, I will not be able to see these questions until I tell you now is the question and answer time. So I'm going to, for example, teach a topic. I'll give you a few minutes to type in your questions, and I'll try and answer as many as I possibly can. If you could all please make sure that whatever concerns you have, you can just keep typing them in, but I will answer them whenever we have the question and answer time. Again, please understand that this is roughly 15-hour webinar, so it is almost impossible for us to cover 100% of the syllabus. So the focus of the webinar is going to be on the technical topics, so the entire audit process. I'm going to start off by discussing factors to consider before you accept clients, move on to engagement letter, planning stage, substantive controls, etc., etc. However, even within substantive and internal controls, I'm not going to be able to cover 100% of the topics, but I will be choosing those areas which are slightly more difficult, and I'll focus on the technique so that you're in a much better position to cover all sorts of problems as we go along. So if we begin, you must be familiar if you are a person who's taking the F8 exam for the first time, or if you are resitting this exam. Either way, you need to be very comfortable with the paper pattern. Section A of the F8 exam has 3 case-based questions. So there are 3 case studies, and then you have 5 objective test questions worth 20 marks each. If you're taking the paper-based version, these questions will only have multiple choice questions. So 4 options, you have to select 1. However, if you're taking your F8 exam as a computer-based exam, then you might have different types of objective test questions. But either way, section A, 30 marks, 3 case studies, and then 5 questions each. Section B has 1 30-mark question and 2 20-mark questions. Your examiner has said that section B would include a lot of questions from your audit process. So the planning stage, the controls, the substantive review, opinion, etc. But there's absolutely no trend. There's absolutely no trend that the 30-mark question will always be from a certain topic. So you have to prepare the entire syllabus of the F8 exam. If you're taking the paper-based exam, your allowed time is 3 hours 15 minutes. This is only for those who are taking the paper-based exam, which basically gives you 1.95 minutes per mark. Now, this time allocation is very, very important because one of the main reasons for not being able to get through the exam is not completing the paper. So I will talk about how you need to time manage each part, but please remember, roughly you have 1.95 minutes per mark available, but that's not the time that we will use to actually attempt the questions. However, if you're taking your computer-based exam, you only have 3 hours available for the 100-mark paper. All right, so that's slightly different for computer-based. My first quick overview is basically a discussion on common reasons for not being able to get through the F8 exam. So before I actually start the technical area, a few things which are common problems faced by the students. The first one is insufficient number of relevant points to obtain a pass standard. So for example, for questions regarding substantive procedures, if the examiner asks you to talk about or write down audit procedures on a certain area, if it's a 6-mark question, you should know that you need to write a minimum of 6 points. Similarly, if I'm asking you to identify 5 strengths in internal controls, you should be able to identify at least 5 or maybe 1 extra. So if you're not able to write down sufficient number of points, you might struggle to get to the ACCA F8 exam. This is one of the most problematic one. If you've not explained your comments in detail, you're not going to get through the exam. Now, I'm going to give very specific F8 examples. When you are talking about internal control deficiencies, simply saying good dispatch notes up not pre-numbered, that's barely half a mark. Until you explain why it is a problem, you're not going to be able to get marks. In ACCA's Code of Ethics, so professional ethics, simply saying this is self-interest is not sufficient. You'll have to tell me what the interest in this particular example is. So if you do not explain your comments in sufficient detail, you're not going to be able to get through the exam. Students are not comfortable with audit procedures and audit process. Now, I'm hoping that by the end of this session today, so by Friday, you should be able to technically understand what the audit process is. I do understand that there will be quite a few of you who've never actually been on an audit engagement. However, I am going to try and summarize the audit process for you before I start going topic-wise. Another important reason for failure, if you simply learn the knowledge and not apply it to the scenario, you're not going to be able to get through the exam. So please remember, learning a textbook. So you could learn the entire textbook by heart and you would still probably get another 40 marks because you're not applying that knowledge to the scenario. As mentioned earlier, you need to attempt the entire 100-mark exam. Now, this is what I spoke about earlier, and this is what I need you to do. I know we have 1.95 minutes per mark available, but in the actual exam, this is the guideline that I'm going to use. So for example, if I'm attempting question number 1, so the first OT case, the first case study, that's a 10-mark question. So 10 marks multiplied by 1.5 is 15 minutes. I'm only going to spend 15 minutes on the first case in section A. The minute my 15-minute allocated time is up, I'm going to move on to the second case. Another 15 minutes, move on to the third case. When I reach section B, the first 30-mark question, part A, for example, is 7 marks. Again, multiplied by 1.5 minutes, attempt that question in that time allowed and move on to part B. So first, exam technique. And please use this, trust me, I've been teaching for a very long time and this works for the students the best. I want you to make sure that for each question, the writing time, I'm only talking about the writing time. The writing time that you take is 1.5 minutes per mark. Once that allocated time is up, you can then move on to the next question. So your F8 examining team has mentioned that these 5 reasons are the most common ones for not being able to get through the ACCA exam. So again, I'm hoping by the time we finish on Friday and by the time I give you the mock to attempt, fingers crossed, you should be in a better position to overcome these areas as well. Just to give you a heads up, in the document section, there is, if you could just give me 1 second, just give me 1 second. All right, guys. So, very quickly, insufficient number of points, you should be able to cover those. Not explaining the comments in detail, again, you should be able to cover this by the time we finish today. Not understanding the audit procedures, in other areas you should be able to cover. Applying knowledge to the scenario in the question, as we will be attempting questions during these webinars. This is another portion that you should be more comfortable with. And not answering all the questions. 1.5 minutes per mark is the time that I want you to basically take when you're writing down the answers. As mentioned earlier, in the document section, there's a new document that was uploaded about half an hour ago. That is something called the knowledge summary. If you could all please type in your chat boxes and confirm that you can see that. If you could please use that knowledge summary to now revise your entire syllabus. So that's basically the entire syllabus of F8 converted into the language which is required by the examiner. It should say knowledge summary June 2017 attempt. So from now onwards, so from this day onwards, whatever material you were using, was it, if it was a textbook or any other revision notes, I want you to leave all of that and just use the knowledge summary to revise your key points. All right. So that's a very brief summary of your entire F8 syllabus in the language which is expected by the examiner. So that's a content that I want you to please refer to as we go along. Do you have any questions up till now? Now, I am going to officially start with the F8 content in just about a few minutes. Until then, if you have any questions at all, please just type them in your chat box. So any questions at all, guys? I've not really done anything. We're going to focus on the technical aspects of F8. That's the first one. I am going to try and attempt as many questions as possible. The paper format, you need to, okay. So if I just quickly go back, section A is, you're going to have 3 mini case studies in section A. So section A is a 30-mark section where you're going to have 3 mini case studies. From each case study, you're going to have 5 MCQs if you're taking the paper-based exam, and 5 objective test questions if you're taking the computer-based exam. So section A, 3 case studies, 5 questions each. Section B, there are 3 questions in total. The first question will be 30 marks. The remaining 2 questions will be 20 marks each. So that's the format of your paper. If it's the paper-based exam, you have 3 hours available. If it's a computer-based, if it's a paper-based exam, you have 3 hours, 15 minutes available. If it's computer-based, you only have 3 hours available. I will not, see, ethics is not a portion that we are going to be able to revise. So we won't be able to revise that in this webinar, but I can give you a very quick overview. So for example, in the scenario, it says the engagement partner has been an engagement partner for the previous 9 years. So that's all that is written. A few things that you need to do. The first thing you'll have to do is write this down, that the engagement partner has been with this client for 9 years. That's identification. So identifying from the scenario. Then you explain it. You write the name of the threat, and then you tell me what the problem is. So this is familiarity, for example, and the partner, because he has a close relationship, he might be too sympathetic and therefore not work objectively. And then you give a recommendation. So identification from the scenario, using the threat name, explaining why it is a threat, and then giving the recommendation. Unless you do all of these things, you won't be able to get complete marks. I do have Musawwir who's helping me with the questions. So if I keep saying Musawwir in the middle, please don't get worried. Musawwir, is there any question that I've missed? Because, okay. The whole syllabus handouts, again, the knowledge summary that has been uploaded, that's the entire syllabus. So knowledge summary covers the entire syllabus. Brilliant, guys. I'm now minimizing the chat box, so I won't be looking at any questions until we have the next round. All right. I now have a short quiz from those who have already prepared for F8, or if you've already taken the F8 exam. So Musawwir, I'm going to need your help now, okay? The first question, I'm not starting F8 right now, but in the audit language, what are classes of transactions for the period under review? Classes of transactions, guys. Musawwir, read out if you have any answer. Statement of profit or loss. Anyone else? So classes of transactions for the period under review. This is a technical audit term. One person has given an answer. Is there anyone else?
SOCI, balance sheet.
All right, guys. Half of you are wrong. A few of you are right. All right. Those of you who did not get the right answer. All my items in the statement of profit or loss are called classes of transaction for the period under review. So my P&L items, all my income and my expenses for the year, they are classes for transactions for the period under review. Are you okay? So whenever, from now onwards, whenever I say, oh, this is a class of transaction for F8, you should instantly think Afaf is either talking about income or talking about expenses. So items from the statement of profit or loss. What are account balances at the period end? So if I say, oh, this is an account balance, what do I mean, guys? Anyone? So this is, again, balance sheet. Absolutely right, your statement of financial position. So all the items in the statement of financial position are account balances. What are financial statement disclosures? What are financial statement disclosures, guys? Notes to the accounts. Absolutely right. All right, if I just give you a quick summary, I need you to all please pay attention. If I talk from an accountancy perspective, we have your statement of profit or loss, you have your SOFP, notes to the accounts, statement of changes in equity and statement of cash flows, and then you have something called accounting policies within these financial statements. For F8, I'm not going to talk about statement of cash flows. I'm not going to talk about statement for changes in equity. I will refer to accounting policies, but I won't be talking in too much detail about accounting policies. So instead of P&L, balance sheet and notes to the accounts, you as F8 candidates need to be very familiar with these three statements. My next question, is a public company the same as a public sector organization? I honestly think it's the same. What's your opinion? Is it the same? So you're saying no. Could someone please tell me what a public company is? If in a question I say this is a public company, what does that mean? It's a listed company. So very good. A few words. Your examiner could call it a public company. She could say it's a listed company. She could say it was floated on the stock exchange. She could say it's quoted on the stock exchange. So public company, again, this is from your earlier studies. The shares are available for the general public to buy from the stock exchange. Very quickly, what is a public sector organization? It is a not-for-profit organization, but so is a charity. It is a government organization. You're absolutely right. It is a not-for-profit organization, but they are basically state-controlled government organizations. So a public sector organization is separate from a charity. I could even write the word charity, which is also a not-for-profit organization, but completely different from a public sector organization. So these are a few words that you need to be very comfortable with. So words that I'm going to use in my webinar, and you need to know what they mean because they're actually a part of your audit syllabus as well. Any questions up till here, guys? We're now officially starting the content, but before we start, if you have any questions at all, please let me know. Fine. All right, guys. So I'm now going to tell you a story. I want you to forget you're actually studying F8 for my storyboard. So these blank slides are my storyboards. Forget I'm teaching F8. Forget you're studying F8. I'm just going to tell you a little story that you need to understand. Now, we have something called firms. Firms, or you could say practitioners. So, for example, Ernst & Young, PwC, KPMG, Deloitte, these are the big four audit firms as we've heard. Now, audit firms or these practitioners of firms, they earn money by offering a variety of assignments. So I went on a firm's website and they said, we offer assurance engagements and we offer engagements where no assurance is given. And I have no idea what that means. So I actually called them up and I said, what are you talking about? What is this assurance engagement? So they said, listen, if you or your management has prepared something and you want us to come and check that something, we're happy to do it for you. So we can check work that you have done and we can give you assurance whether according to us that work has been done correctly or not. And within that, we have two further categories. If you want us to do a lot of work and maybe do a bit more in-depth checking, we'll give you reasonable assurance. So this basically means I'm going to do a bit more work, a bit more in-depth checking, but then I'll be able to give you reasonable assurance on whether we believe this is okay or not. However, if you do not want us to do this much work, or maybe if you don't want that high a level of assurance, we can also give you limited assurance on that area that you want us to check. So within this, we will look for obvious problems only. If we find a problem, we're happy to check that problem in detail. So as a firm, I can give you two types or two levels of assurance. If I give you a reasonable assurance because I'm doing more work, my wording would start with in our opinion. However, if I'm giving you limited assurance and looking for obvious problems only, my wording in my report will start with nothing has come to our attention, etc., etc. So the firm is basically telling you that if you have a subject matter is the work that you've done as the management, and you want assurance on that subject matter, we can either give you reasonable assurance or we can give you limited assurance. If you do not want assurance, you simply want to get some work done, we are actually happy to do that as well. So instead of us checking something, we can do the work for you. If you want us to compile financial information, so a compilation engagement is one where I can compile financial information for you. So I can prepare the financial statements for you. I can actually make the non-current asset register for you. So if you want us to compile financial information, we offer compilation engagements. If there's any other work you want us to do, we're happy to do that as well. So agreed upon procedure. I'm the bank. I want someone to come at 9 o'clock in the morning, wait in the waiting area, and make a report about the waiting times that each customer had to face. So the practitioner, they're doing an agreed upon procedure. They're going to send an employee or a trainee. He's going to sit at the reception and note down the waiting time of each customer. 5 o'clock, he's going to type up a report, give that report to the management and go back home. So I'm not checking anything. I'm just performing an agreed upon procedure. So my story is that a firm could be offering assurance engagements or no assurance engagements. Within assurance engagements, they could either be giving a reasonable level of assurance or a limited level of assurance. So as FH students, these are technical areas that you need to be prepared with. Before I take questions, I need a bit of technical information about, about what an assurance engagement is. So a quick revision. An assurance engagement is any engagement in which there are three parties. There's a subject matter, there's suitable criteria, you gather evidence, and you give a written conclusion. So 5 elements of an assurance engagement. Audit. External audit, as we know it, is an example of a reasonable assurance engagement. So an external audit is one. If I apply this, the responsible party is the board of directors who have prepared the financial statements. The intended users are the shareholders. The practitioner is the firm. Subject matter are the financial statements. So the board have prepared these financial statements. The firm is going to check these financial statements and give a report to the intended user. They are going to match these financial statements to the reporting framework. So how do I know the inventory figure is correct? I compare it to IS2. How do I know their revenue recognition is okay? I compare it with IFRS 15. So the suitable criteria against which the subject matter is evaluated, in my example, are the reporting standards. Auditors have to gather sufficient appropriate evidence. At the end of the audit, if you're saying that these financial statements do not give a true and fair view, then you need to have appropriate evidence to actually support this conclusion. And you give an assurance report. Because this is a reasonable assurance engagement, you will always start off with "in our opinion." Because like we studied, this is a reasonable assurance engagement. Just a few things. I'm just going to very quickly cover why we do an external audit, and then I'll take the questions. Although I know you would basically partially know what external audit is, I need to give you another story that you have to be comfortable with. If I talk about a listed company, so a public company. Shareholders are the ones who own the company, and directors are the ones who run the company. And this is what we've already known. So if I have shares in a listed company, I actually can't sit on the board and take decisions. Now, these directors are also responsible for preparing the financial statements. And as accounting students, we know that these financial statements are basically telling you about the financial position and performance of the company. Now, these directors, they have a few concerns. What they want to do is, they might try to manipulate these financial statements. So they might want to show extra assets and income. They might want to hide their liabilities and expenses. I'm only telling you a story that these directors, they know that the financial statements actually represent their performance. If my profit from the last year has gone up, the directors have done well. If the company is continuously making losses, the directors are not performing their role well. So they actually have the motivation to try and manipulate the financial statements by overstating their assets and income and understating their liabilities and expenses. My shareholders know all of this. So they know that the directors might be trying to manipulate the financial statements. So what they need to do is, they want to hire an independent third party to give reasonable assurance on the financial statements. So as F8 students, you're never going to be asked to explain why do you get an audit done. But you need to understand that as auditors, we are independent third party. Third party means I cannot be a shareholder, I cannot be a director. I have to be a third party, so other than these two. And when I'm giving reasonable assurance, I will keep looking for these problems. I will keep looking for ways they might be trying to hide their liabilities and expenses, and they might be trying to overstate their assets and income. So before we start the audit process, a few things you need to be comfortable with, because these are topics that are not covering in detail. You should know difference between reasonable and limited assurance engagements. You should know the difference between assurance and no assurance engagements. You should know the elements of an assurance engagement, and you should be comfortable with the independence aspect of the auditors. So the entire code of ethics or your professional ethics, you need to be comfortable with that so that you can evaluate whether this third party is truly independent or not. So this was a fast forward version of the topics that I will not be covering in detail. If you have any questions at all, please let me know. So now is the time. You have the option of typing in your questions in the chat boxes, and I'll see if I can answer as many as possible. All right, guys. Any questions at all, guys? Are they typing in? Okay. Would the subject matter include director's report as well? For external audit, I'm glad you asked this question. For external audit, my subject matter is only financial statements for external audit. But you can get assurance on any subject matter. So to answer your question, for external audit, my subject matter is only the financial statements. We will look at inconsistencies between director's report and financial statements, but I will only give an opinion on the financial statements. This is something that you need to be very clear on. In the MCQs, no, the questions can be from any topics at all. So there is no trend at all. Please don't try to predict what's going to come. It is not a 10-day session. The session finishes on Friday. Section B has 3 questions, Nasir. The first question is 30 marks, question number 2, and the next 2 questions are 20 marks each. All topics are important for the exam, Bashir. All topics. Amjad Bashir, all topics are important. No, this is important. Yusra, criteria is IAS. So financial statements are the subject matter. I match them to the reporting framework. So as auditors, I need to make sure financial statements have been prepared accordingly in relation to the reporting framework, not the auditing standards. For external audit, users are shareholders. I prepare my report for the shareholders. Third parties can use them, other stakeholders can use them, but that's not my headache. As an external auditor, my report is for the shareholders only. Directors will try to manipulate the financial statement, Osama, because they reflect their performance. If financial statements show a worsening position, that automatically tells the shareholders that directors have not made the right decisions. So they want to hide the fact that they did not perform well. The third party, the independent third party, is the external auditor. The external auditor is the third party. So an external auditor cannot be a shareholder. It cannot be a director. They have to be a third party other than a shareholder and director. I will not be able to cover code of ethics, guys. If you have specific questions regarding self-interest, familiarity, etc., please read the knowledge summary and maybe they'll become easier if you understand that. I will not be able to cover code of ethics because that's not something I can go into detail. If we have time left on Friday, we can cover it. Non-assurance engagements are any engagements where you're doing the work instead of checking the work. So in simple English, assurance means someone else has done the work, I need to check it and give assurance. No assurance means I'm going to be doing the work. So there's no checking involved, it's actually performing the work. Review engagements are an example of a limited assurance engagement. So audit is reasonable assurance and review is limited assurance. Directors cannot appoint auditors. They can recommend appointments, but the final approval has to come from the general meetings, guys. Compilation engagement is any engagement where you have to work with financial information. So compile financial information. You could compile it as interim accounts, you could compile it as financial statements, you could be making registers, etc. Preparation of financial statements is an example of a non-assurance engagement. Review and audit, the difference has already been discussed. Audit is reasonable assurance, review is limited assurance. Yes, suitable criteria means IFRS only, because we are doing the international version, guys. So yes, for us, the suitable criteria is your international accounting standards. Writing style matters for section B, yes. Scope of audit means what are you checking? So external audit, my scope is just the financial statements. So what comes in my scope? In other words, what do I have to give assurance on? No, please do not give reference to ISAs at all. Any topic can come in any section. Assurance can come in section A, section B, anything at all. You have to link your answers to the scenarios, not to the ISAs. No. Auditor can never be an employee of a client. They have to be an independent third party. So they should not have anything to do with the client at all. I will not be doing any exam standard question on ethics. No. Guys, you have the course plan. Musavi, do we have the course plan uploaded? All right. We will upload the study plan today, or the webinar plan that will mention the topics that we will cover in the webinar. Osama, members can perform management work. Why firm members cannot perform management? What does that mean? Hang on. Why firm members cannot perform management work in non-assurance engagement? Yes, they can. So non-assurance engagement is exactly one where you're doing something that the management could have done themselves as well. But instead they decided to outsource it. So they can. Where is the chat box? Good luck. I want to confirm that in external audit, the level of assurance is reasonable. External audit is always a reasonable assurance engagement. High level is reasonable level. There is no higher level than reasonable. So reasonable is the highest level. You do not have to write ISAs in the answers. Yes, it's the shareholders who appoint them. All right, guys, I'm flicking through the questions now. I'm going to have to skip a few. All right, guys, I'm now moving on. To the first part. I'm minimizing the chat box now. So any questions that you are typing, I will not be able to see. All right. Before I actually start the topic-wise discussion relevant to F8, I'm going to tell you the audit process as a story. So I'm actually now going to tell you again, as before, this is my storyboard. I'm pretending that I'm not teaching F8. Okay, so you're an engineer who just wants to understand how an audit is done. So I'm just going to use very simple terminology. So the entire technical portion of F8 process, or this audit process, is going to be summarized now. I want you to pay attention. Please do not type or write anything, just listen. This is the important part. So, for example, we've just discussed that we need to sort of check. Don't ever use the word check. I'm only using it because it's a simpler word to understand. So I need to sort of check the financial statements and tell whether, in my opinion, financial statements are okay or not. How do I actually check the financial statements? the first thing I need to do is something called planning. So what's going to happen is, when you actually reach the audit client, I want you to understand the business in detail. So you are people who have never done an audit, you've never heard of an audit. You reach the audit client. I want you to ask questions. I want you to look at policy manuals. I want you to look at the marketing documents. I want you to understand what has been happening or what happens in the company. On the basis of the information that you get, I want you to tell me which areas of financial statements are at a risk of fraud or error. So what does that actually mean? You said, Afaf, I was standing in the lift, and I heard someone say the company gives profit-linked bonuses. The minute I heard that, I quickly realized that profit is an area that might be at a risk of fraud. I'm concerned that they might be trying to show extra profit so that they get extra bonuses. I said, fine, that's a very good point. There was this another person, he said, when I was looking at the files, I saw that there is a lawsuit which has been filed by a customer. So a customer who came to the premises, he slipped because there was some water and he broke his leg. Now the customer has filed a lawsuit against the company and the decision has not yet been taken. So when you were understanding the business, another thing you found out was the lawsuit. As accountants, I need to see which areas of financial statements could have fraud or error. So you ran back to your room and you said, maybe provision. So if it is probable that we will lose the lawsuit, maybe there's a provision which needs to be made. If not a provision, maybe a contingent liability disclosure. So the first thing that you have to do, that's what you need to focus on. As auditors, the first thing that you have to do is try and find out which areas of the financial statements have a greater chance of fraud or error. So in any audit, that's the first stage of your work. So at the end of this process, you think it's only these two, only the profit figure, which actually covers everything, and then the provision or contingent liability disclosure. These are the areas which are at a risk of fraud or error. Once you have this list, the next thing I want you to do is work on the system of preparing financial statements. The second stage, I want you to go to the purchase manager, ask him how they record the purchase figure. I want you to go to the sales manager and to the payroll manager, ask the same question. How do you actually record the sales figure? How do you actually record the payroll figure? When you buy property, plant and equipment, how do you record this information? So in the audit process, the second stage is trying to understand this system of preparing the financial statements. At the next stage, I want you to confirm the amounts and the disclosures that have been recorded in the financial statements. So at the third stage, this was the very first time when I started working on the sales revenue amount recorded in the P&L. Income, expenses, assets, liabilities. Confirm whether these amounts are accurate, complete, etc. Any notes to the accounts, are they correct or not? Has the company given all the disclosures? So at the third stage, you are going to work in detail to confirm the classes of transactions and related disclosures, the account balances and related disclosures. So if I put names to this, first stage is where you carry out risk assessment. Second stage is called internal controls testing. Third stage is called substantive testing. So these three are just very fancy words for planning, systems, and confirmation of amounts. If you just give me 1 second, I'm just going to bring up a new slide over here. If you are working on the sales figure, in the statement of profit or loss, the first thing you did was you wanted to see if each area was risky or not. So each class of transaction, you wanted to find the chances of fraud or error. So fraud and error. You did this for each class of transaction. You have to do this for each account balance. Then you wanted to know the system of preparing financial statements. So for each profit and loss item, for each SOFP item, you're going to focus on the way that amount was recorded. Then you're going to confirm the amounts and related disclosures. So each class of transaction, each account balance, you want to know if these amounts are correct. You want to know if these amounts are complete. You want to know if they have been recorded in the correct accounting period, etc. And these three stages have fancy names. This is the planning stage of audit. This is where you check the internal controls over financial reporting, and this is called the substantive stage of audit. So your examining team, your examiner has repeatedly said that students need to be very clear, not for passing F8, but in real life. You need to be very clear the three levels or stages that we focus on before we actually conduct the review and then give an opinion. So before conducting review and opinion, these are the stages that we follow in audit. Any questions regarding what is up on the screen right now? I'm not going to answer any technical questions right now. Don't ask me what certain F8 topics mean. I'm just asking, as a layman, as a person who's never been on an audit engagement, do you understand that we will first try to find out which areas have risk of fraud and error? We will then focus on the system of preparing financial statements, and then we will confirm the amounts and disclosures. Do you understand this in the most basic terms? All right. That's brilliant. That is brilliant. So please remember, if I now talk about F8, There will always be a question in your exam from this stage. There will always be a question in your exam from this stage. There will always be a question from this stage. So if you understand them conceptually, you would be able to attempt those questions in a much better manner. And either in section A or section B, there will always be a question from this stage as well. Maybe a combined question, maybe independent, but these 4 questions or these 4 topics will definitely be tested in your audit exam. There is no way out of this, okay? Now, this is what I am going to focus on in the webinar. I'm now going to start the technical teaching. I will first talk about how or what factors to consider when you're getting new assignments. I'm going to talk about the engagement letter. Today, we will cover audit planning. We will then go on to internal control, substantive review and opinion. So when you get the study plan, you will know that the webinars from today to Friday will cover the audit process and the technical areas of this process. The first part, you should know what a firm or a practitioner means now, okay? Your auditing standards say that before you accept a new client, there are a few things that you need to consider. So maybe I advertised in the newspaper. Maybe I submitted or I want to submit a tender for an assurance engagement or an external audit. Maybe someone has just referred a client to me. It doesn't matter how you're getting a client. It doesn't matter. In all cases, your auditing standards say the first thing you should consider is the reputation and integrity of the directors. There's a very logical linkage. If the directors, and remember these directors prepare the financial statements, if the directors have poor integrity or they have a reputation of being unethical, if they have prepared the financial statements, there's a chance that those financial statements will have lots of fraud and error. If there's a lot of fraud and error, and as an auditor, I do not find those fraud and error, I might be facing a lawsuit in the future. So my first question is, do I really want to work with this company? There is no black or white answer. I'm not saying do this or don't do this. Auditing standards say reputation, integrity, and maybe even the competence of the directors. You have to consider these factors before you decide whether you want to accept this client or not. The level of risk attached to this audit. When I was planning on submitting a tender, I found out that in the recent 5 years, this company has changed 5 auditors. Now I have concerns. Why? Normally, audit firms and clients want to work together for the allowed time. Why are they frequently changing the auditors? What are they trying to hide? Again, if, as mentioned above, if the directors are not skilled, they're not qualified, the risk is there are more errors that I might not be able to find. Do I want to work with this company? Keeping in mind the risks above, you will have to evaluate the expected audit fee. If the risk is high, so more chances of fraud and error, and if you still want to go ahead and accept the client, fine, do it. But incorporate that in your basis of audit fee, because if you have to do more work, charge the fee accordingly. So in relation to the client, maybe a few things you can consider before you accept the audit. With regards to my own firm, are there any independence issues? So for example, maybe there's a conflict of interest. So if you remember, conflict of interest has various examples. One of them is competitors. You are going to tender for the audit of company A. You are auditing their competitor already. So you will have to see what the Code of Ethics says about this. If there's any independence issue that needs to be considered before you accept the client. Do you have the knowledge and the skills to accept this client? Do you have sufficient staff available? The client wants the audit finished in 2 weeks. Do you have the resources to do the audit in 2 weeks? Is there any specialist skill or knowledge required? So you've only audited manufacturing companies. This is a financial services sector client. So it's a bank. Do you have the specialist skill that you actually need to audit a financial services client? Okay. Before you proceed with the client's permission, you have to send the outgoing auditor a letter. This letter is called a professional etiquette letter. So a few things. Make sure you do this with the client's permission. And in that letter, you ask the outgoing auditor whether there's any ethical or professional reason why you should not accept the engagement. So 8 factors roughly that you need to consider. So use this slide as a checklist. Before you accept a new client, or maybe if you want to continue with the previous client, these are factors that you need to evaluate before you take a final decision. Another thing that you need to consider, and this is extremely important, is precondition of an audit. You have not accepted the client yet, okay? So you haven't signed the engagement letter has not been signed right now. But in the initial discussion stage, you need to evaluate whether the reporting framework is appropriate and allowed by law. So in that initial discussion stage, the directors told you that they have used international accounting standards. So reporting framework, which is very good. It's acceptable. But is it allowed by law? So you need to see the reporting framework should be acceptable, plus it should be allowed by local law as well. Another precondition is that the management should acknowledge that it is their responsibility to prepare financial statement. It is their responsibility to have proper controls, and they will have to give me access to all information and all records. Before you accept a client, if you have any hint that this precondition is not being met, then according to your auditing standards, you should not accept that client. So as a firm or a practitioner, these are a variety of factors that you need to consider before you decide whether you want to go ahead and accept this client or not. Once you have considered all of these and you have decided to go ahead. So I'm happy with the risk, I'm happy with the preconditions, I have the resources, all of that has been done. You have to sign a contract called the engagement letter. Now in F8, from your knowledge summary, please learn the contents of an engagement letter. I've just put up a few examples there. So the auditor is going to draft an engagement letter with these contents. So your auditing standards say, clarify the objective and scope. I am going to give a reasonable assurance on the financial statements. Put that in the engagement letter. Clarify the responsibilities of the auditor and the management. Tell the management that financial statement preparation is your responsibility. Mention the reporting framework. Mention any reports that you're going to issue. You can write down the arrangements that you require. You can mention the audit team composition. So my team will have 2 juniors, 1 senior, 1 manager. Include that in the engagement letter. Mention the basis of the audit fee. So I'm going to charge you on an hourly basis. Then ask the management to sign the letter to show that they agree to the terms of engagement. So once you've decided to go ahead with the audit, you have to draft an engagement letter. Please remember a few things. For each new audit engagement, you have to have an engagement letter. So for each new external audit engagement, you need to make the engagement letter. Do not start the audit before this letter has been signed. However, this comes up in your exam a lot, okay? What if it's a recurring engagement? So this is not your first year of audit. This is your 3rd year of audit. Your auditing standards say that you do not have to have a new engagement letter every year. However, you need to review if engagement letter needs to be changed. So for recurring engagements, every year conduct a review for a few examples. So when can engagement letters, or when should engagement letters be changed? These are just examples. This is not a list, just examples. If there's any indication that the scope was misunderstood by the client. So last year, they gave me a lot of trouble. Every time I asked them to give me a ledger, they would say, you prepare the ledger first. Or maybe, no, this is not something that I have already. So if there's any indication that they misunderstood the scope or the objective, maybe you should revise the engagement letter to clarify this. If the terms of engagement have changed, previously my basis of fee was fixed, now I want to charge on an hourly basis. If senior management has changed, or maybe the ownership of the company has changed, maybe local laws or requirements have changed, maybe the reporting framework has changed. In your knowledge summary, I have given you more detailed examples, but these are a few that you need to keep in mind. So the summary is, for a new engagement letter, you need to have a new engagement, external audit engagement, you need to have a new engagement letter. However, if it's a recurring engagement, you need to carry out a review to see if it needs to be revised. If it doesn't need to be revised, you can go ahead as it is and consider another review next year. We have now finished the first portion. So the first portion, which was obtaining, accepting, continuing audit engagements, this has completely been revised. I'm now opening up the chat box for questions. Zen, I'm not sure why you can't. Okay, so I have one person who has said instead of using the word check, you use the word audit. So you don't check financial statements, you audit financial statements. This is for Caro Vehito. What do we do in stage few? Review and opinion, I'll revise. Review and opinion, we are going to cover on Friday. So don't worry about that. We will cover that, okay? I am going to tell you how we get the understanding. That was just an overview. I will cover how to get the understanding today. No, Janice, hopefully, she is never going to, your examiner will never ask you to prepare an engagement letter. However, she wants you to know the contents of an engagement letter and examples of situations where the letter might need changes. So you still have to learn the context, but no, you will not be asked to prepare the engagement letter. Shiraz, you can use the word review, inspect. Yes, you can. Bilal, for these knowledge areas, 2 lines per mark should be enough. I would say yes. You know what? Instead of focusing on number of lines, just focus on the answer. Just answer the requirement. But yes, 2 sentences should be fine. When we say change in applicable financial reporting framework, does it mean a change? No. Applicable financial reporting framework means you were preparing your financial statements according to international accounting standards. Now you have to use the local standards. So your reporting framework has changed. As per your local laws, you're not allowed to use international accounting standards anymore. So that's the reporting framework. If you're doing the audit of the same client next year, we need to sign no. Yeah. So if you're doing the audit of the same client next year, you don't have to sign a new engagement letter because this is a recurring engagement. So instead of a new letter, just review if changes have to be made using the examples. If changes have to be made, then yes, do a new engagement letter. No, there is no threat to independence linked to changes in engagement letter. Do we need to relate the reason of accepting it? Yes, you do. Yes. Roughly, this is a very good question. Who's asked this? Mars. Mars has asked this question, that do we need to relate the reason or the factors to the scenario? So if I ask you which factors to consider before you accept a client, some points you can pick up from the scenario, you have to do that. Some you can write as straightforward, okay? So do a mixture of both. Yes. Someone has asked me, I'm sorry, I don't know how to pronounce your name, but they have asked, can she give an engagement letter and we have to identify the errors and mistakes? She can do it, but she won't do it. She will not do it, don't worry. That's more P7. So I don't think, she might give you a small extract, but I don't think she will go to that level. That's my personal opinion. I can't discuss the marking scheme if I haven't done a question. Marking scheme is for questions. If there's no question done, Rao Saifullah, if there's no question, there's no marking scheme. What are the things we keep in mind while accepting a client for an audit service? I've just discussed this. Hafiz Bashir, I think. So whoever has asked me, Amjad Bashir, sorry, yes. The factors to consider before you accept the client, we just did those. I'm just going to bring this up again. This one. These 8-9 factors are the ones that you have to consider before you accept a client. Kindly provide the format for letter and report. I will do that in the last class. The professional etiquette letter, Adil, very good question, Adil Siddiqui. The professional etiquette letter is drafted on the auditor's letterhead, but with the client's permission. If the management does not agree to sign the engagement letter, we do not, we will not start the audit until the engagement letter has been signed, Tanveer. So if the engagement letter has not been signed, then you don't start the the engagement, okay? Muhammad Usman, I am going to, you've said half an hour to do, see, as mentioned earlier, you all actually have 1.95 minutes. In reality, 1.95 minutes per mark. So that means for 10 marks, you should have 19 minutes. But we use, as a trainer, as a tutor, I'm telling you that you should use 1.5 minutes. So that's the recommendation. This way you'll have time left at the end as well. You should never spend half an hour on 10-mark question. Please don't do that. Please don't ever do that. Can auditors cancel the engagement letter? No, they can't cancel it. They'll have to resign from the audit. They can't cancel it. Once you've started the audit, you'll have to have a formal resignation. Terms and conditions are decided before writing a letter. The terms and conditions are mentioned in the engagement letter, guys. If the management does not, Shiraz Ali, if the management does not let you contact the previous auditor, then you should not accept this client, because that means they have something to hide. That's a risk. No problem. All right, guys, I'm now moving on to the second one. The second one is very technical. It is more detailed, so therefore it's going to be a slightly longer session before I let you take questions, okay? Before I let you ask questions. All right. So if I quickly go back over here, we're done with the first portion, okay? So we've covered the auditing, obtaining, accepting, and continuing engagements, and we're now moving on to the audit planning stage. My storyboard first. All right, guys. I'm being very specific to F8, and I am going to cover a lot of your knowledge in the next 10 minutes, so everyone needs to pay attention. Just going to draw up a flow chart here first. All right, just give me one more minute. All right, guys. The minute you see any question, if it's section A or section B, does not matter. The minute you see any question on the planning stage of audit, you should instantly have this flowchart in mind. So this is the basic information you need to know to attempt any question regarding the planning stage of audit. So I'm starting my story now. When you have signed the engagement letter, you are ready to start the audit. So today is your very first day at the client. The first thing you have to do is understand the client in detail. So your auditing standards say that the very first thing is you need to get information about a few areas. Now, what are those areas that I need to get information about? You have to learn it. I want to know about the industry that they work in. What are the regulatory requirements of this industry? Any other external factors that apply. I want to know the nature of the entity and the accounting policies that they use. So I want to know whether this is a group or an individual company. Is it who owns it? I want to understand their objectives. I want them to tell me about their strategies that they have used to achieve those objectives and the risks that they believe they face. Please remember, at this stage, I am doing nothing except gathering information. So I ask them to tell me about the risks that they think they face. I want to know what are the key performance indicators. So which measures are important for them? Is it the operating profit margin that they focus on or the sales revenue figure? So what measures are important for them? And I want to know their system of internal control in detail. So your auditing standards say, and I picked this up from the auditing standards, so I want you to use this as well. Examples of each of these 5 areas are given in your knowledge summary. But right now, you need to get an understanding of these 5 areas. So remember, it's my first day at the client. These are the 5 basic areas I need to get an in-depth understanding about. And I can get this understanding from quite a few places. I can look at previous year financial statements. I can talk to previous auditors and see if they will give me access to their files. I can look at last year's reports to management. So last year's reports to management given by the auditor, external auditor, internal auditor, they can be reviewed as well. I can look at the client's own policies and procedure manuals. I can simply discuss with the client. I can look at the minutes of board meetings. So board minutes are evidence or discussions, written evidence of the discussions that took place during the board meeting. I can look at current year's budgets and management accounts. Please remember, management accounts are monthly accounts which are prepared for decision-making purposes. And budgets, management would have prepared again to make sure that they manage their resources properly. I can look at the client's website. I can also look at financial statements of competitors. So auditing standards say that when you start an audit, these are the few areas you need to get an understanding about. In F8, you need to learn these areas. So what information do you need and where can you get this information from? Keeping in mind all these points that you have found out, I need to talk about the chances of fraud and error in the financial statements. So keeping in mind the understanding, I have to work on the audit risk. Now a few technical terms. My first important definition is that of audit risk. Audit risk is the risk that an auditor might give an incorrect opinion when financial statements are materially misstated. So in other words, it's the risk that as an auditor, I might end up giving an incorrect opinion on the financial statements. So there was a material misstatement, but I could not identify it. So that's the audit risk. Your auditing standards say that in order to evaluate the chances of you giving an incorrect opinion, you need to look at two areas. Any inherent problems that might increase chances of fraud and error, any control problems that might increase chances of fraud and error. So for example, you said to me, Afaf, I have concerns. You asked me to tell me what the audit risk at company A is. Now this company has very weak systems. Their control or system for preparing financial statements is very weak. And obviously, if the system is weak, then chances of fraud and error are high. Again, another factor that I want to tell you is, so you're telling this to me, that they have a lot of accounting estimates. Now, accounting estimates involve judgment. So accounting estimates inherently have a higher risk of fraud and error. So after telling me this 5-minute story, you said that my conclusion is that because inherent and controlled risks are high, the risk of material misstatement in the financial statement is also high. I immediately get worried. If the chances of fraud and error are more, I'm concerned I'll give an incorrect opinion. However, there is one more element of risk that we can consider. Detection risk is the risk that the auditor might not be able to detect material fraud or error. So if your risk of material misstatement is high, I can't do anything about that. They have weak controls, unfortunately, can't do much about it. Accounting estimates are inherently more risky. Unfortunately, I can't do anything about that. So if inherent and controlled risks are high, then what I can do is I can sort this problem out. I can reduce my detection risk by, for example, having a more experienced team. I can have lesser detection risk by making sure my sample selection method is okay. I can reduce this risk by applying proper professional skepticism. So what did I just tell you? Audit risk is the risk that the auditor might give an incorrect opinion. Audit risk includes risk of material misstatement in financial statements as well as detection risk. If inherent and controlled risks are high, I will have to try and reduce detection risk. And how can I do that? I just told you. Detection risk is something that I can control. I can have a better team, better sample selection, more experienced individuals, proper professional skepticism. And if my detection risk becomes low, then my audit risk automatically will become low. So the technical aspect of this is, if I go back, that actually instead of writing risk, I have to evaluate the audit risk at the planning stage. So as F8 students, the first thing you do is understand the client. Keeping in mind the understanding. See, it's very linked. I understood the internal controls over here. I found out the control risk over here. I understood all this information over here. Keeping in mind, I wanted to know what the inherent problems were. So it's all linked. I understood the client. Keeping in mind all this information, I identified or evaluated audit risk. This was just the technical learning portion that we've done up till now. I'm going to move on to analytical procedures and actual F8 questions on risk. Before I move on to these two topics, if you have any questions regarding understanding the client, any questions regarding audit risk and the components of audit risk, or any questions regarding the relationship, please let me know now. Then I'll move on to the next stage, the next examples of risk. So I'm opening up the chat box. I'm just going to go all the way back because that's a lot of questions. Those of you who keep saying start substantive procedures, I am not going to start substantive procedures until I reach that stage. We have to, substantive procedures are important. They do come up in the audit paper, of course, but planning, controls, they're all part of the audit process. So unfortunately, I'm not going to be able to break the sequence. We are going to cover audit in a sequence. And that sequence means substantive does not start for another 2 days. Professional etiquette letter is the letter that I send to the outgoing auditor. You call it the clearance letter, but I don't want you to use that word. Do not use clearance. It's the letter to the outgoing auditor. Audit risk. Okay, I'm just going to put up a few points here because a lot of you have asked this. I'll just explain this slide in more detail. When I say business risk is not my headache. I'm the auditor who has to check the financial statements and give an opinion. The problems that the business might face, that's the director's problem. So as an auditor, I am not going to work on business risk. I don't want to know what cash flow problems you are facing unless they have an impact on financial statements. If your air conditioner is not working, I don't care because it has no impact on my financial statements. If your employee comes late, if he talks all day instead of working, that's a business risk, not my headache, because this does not come in my financial statements. So you have to be very clear on what a business risk is and what an audit risk is. Please remember, as an auditor, my world revolves around the financial statements for that year. Nothing else is important to me. So business risk, business's headache, audit risk, my headache. Audit risk has inherent and control risk. Inherent risk means that there are some areas which are by nature more risky. So this is, I'm just going to change the color of the pen. Okay. Risk in the nature of business or account balance or class of transaction. So it's not the company's fault. that business or that account balance or class of transaction is risky by nature. So accounting estimates are risky by nature. Fair value, an accounting estimate, is risky by nature. The fact that you give profit-linked bonuses, this is a point which is risky by nature. So inherent risk means that there will be some businesses, some account balances, some classes of transactions which are risky by nature, which means higher chances of fraud and error in the financial statements. Control risk means that the risk that the client's systems might not be able to prevent, detect, I apologize for my gorgeous handwriting, prevent, detect fraud or error. So control risk means that I'm not talking about the nature now. I'm talking about the client systems. The client's systems are such that they make me believe that the chances of fraud and error are more in the financial statements. So they have no segregation of duties. They don't have any pre-numbered documents. All of this is making me think that there's a higher chance of fraud and error in their financial statements. So risk of material misstatement is a combination of inherent and control risk. So because there were quite a few questions regarding this, I've answered them together. Professional skepticism means question everything. Professional skepticism means being alert to fraud and error or questioning attitude. Okay, so as an auditor, I need to have a questioning attitude. I need to be alert to risk of fraud and error. That's what you mean by professional skepticism. All three risks cannot be high. If inherent and control risk are high, you as auditors have to reduce detection risk. Otherwise, you will face a lawsuit. So no audit firm will be, I would say, silly enough to make detection risk high intentionally. Yes, detection risk means includes sampling and non-sampling risk. We can only control detection risk. That's correct. I've already given examples of inherent risk. Yes. Who is this again? Ghulam Ghaus, yes. If inherent and control risks are high, then we have to reduce detection risk. Yes. If you're very sure, you can mention Nasrullah. Yes, you can. Yes, Muhammad Ilyas, measurement and review of financial performance is, so you know you have various key performance indicators. You ask the management, for you, what are the most important performance indicators? So is your performance evaluated on the basis of revenue? Or is it on the basis of profit? Because revenue is something else, profit is something else. Is it the return on capital employed that you focus on, or the operating profit margin? So which performance indicators are important for them? Because if they're important, then that means they must have tried to manipulate those indicators. So that's why I asked them this question. Detection risk must be low means, as an auditor, I have to do a lot of work to reduce the chances that I might not detect fraud or error. So low detection risk means reducing the chances by putting in extra effort. Again, detection risk no means I have to put in extra effort to try and find out fraud and error. Shiroz, the answer to your question is yes. I have not covered response yet. Examples of inherent and controlled risk are given in your knowledge summary. Controlled risk, there is no example. That was just like I just made them up. That the systems they don't have proper systems. So the person who's accepting cash is also doing the recording of cash. So no segregation of duties. GDNs are not pre-numbered. These are all examples of weak controls. Accounting estimates are risky by nature. Can we also say that audit risk covers financial statement, but business risks cover whole company? Yes, you could say that. I guess yes, Adil. In a way, yes. But don't say it in your paper, please. Risk of material misstatement covers inherent and control risk. Zain, the answer is both. The answer to your question is both. Can we mention scenario? Yes, you can mention. If you know it's detection risk, you should mention it, yes. No. Janice, when the regulations required, okay, Janice, listen to this very carefully. She says, if the company is not compliant with regulations, what does an auditor do? If a company does not comply with regulation, you have to see if there's an impact on the financial statements. As an auditor, like I said earlier, my entire scope is the financial statements. So if non-compliance impacts the financial statement, I will ask the management to record the impact. So you've not complied, you have to pay a fine. Impact is, have you created a provision for the fine? If the management agrees to include the provision, no problem. However, if they do not include the provision, then you will consider materiality. So go stage-wise. Number one, does the non-compliance affect financial statement? If it does, has the effect been included? If it hasn't been included, is it material or not? So that's the sequence you need to think of. Habib, S and Habib, no. Detection risk is not the outcome of my audit. Detection risk is a part of audit risk that I can control. So if someone says to me that detection risk is high, I can say, don't worry, I'll sort it out. I'll bring in a more experienced team. I will make sure I use proper audit software for sample selection, etc., etc. So it's not an outcome, no. How can you reduce detection risk? I actually mentioned it here. If you look over here, guys, you can reduce detection risk by having an experienced team, proper sample selection, having an attitude of professional skepticism, etc. Shiroz, sampling risk is the risk that you might not have picked up the sample correctly. Non-sampling risk is the risk that even if you picked up the sample correctly, the work that you did was incorrect. So sampling risk focuses on sample selection. Any other problem is non-sampling risk. Yes, that's correct. Our responsibility, Amjad, is to identify risk of material misstatement, but focus on detection risk. You still have to identify it. Inherent and control risks need to be identified, but focus on detection risk. Professional etiquette letter. Hassan Mehdi, the answer is professional etiquette letter. No, auditor will always be able to reduce detection risk. They can't make it zero, but they can reduce it. Yes, business risk is related to the client. Sorry, what was this? Business risk related with the client as an auditor. What? As an auditor, we don't do anything about business risks in F8. So as an auditor, I go to the management and I ask them what the business risks are, but we do nothing else about it. So we do nothing else about it for F8. There is no defined acceptable risk level of audit. Yes, you will be you can have these slides as well with my lovely handwriting on it. Organization, yes. If the organization has weak controls, that means control risk is high. Absolutely. You need to know you need to have this straightforward wording as well. Nafe Hamid, you need to have this straightforward knowledge as well. No, detection risk is not automatically reduced. You have to do it. Yes, if the control risk is high, you are going to increase your work, but we have not done this yet. We have not done this topic, Mariam, yet. I'm now skipping through questions, guys, because they're very repetitive. They are asked, the same questions are being asked over and over again, so I'm not going to be able to answer them over and over again. Business risk is not examinable in F8, guys. Habib Saqib, you're right. There is no acceptable level of risk. Why? Key performance indicators. Sumaya, key performance indicators are basically indicators against which your performance is measured. So financial performance is measured using your ratios that you must have done in F3 and F7, right? So those ratios. All right, guys, I'm minimizing the chat box now because all the questions are very repetitive. I'm moving on to the next portion. Now, as auditors, I'm not looking at the questions anymore, all right? So, as auditors, there is one more way of identifying risk. So, you know how I said you find out, keeping in mind the understanding, you find out which areas of financial statements have a higher risk of fraud and error. On top of that understanding, there is one more thing that you have to do, and that is called analytical procedures. Now, what is the definition of analytical procedure? First, let's look at that. This is where you evaluate financial information by analyzing plausible relationships. So you basically evaluate financial information by looking at different relationships between financial and non-financial data. In simple languages, what do? So you are auditing the financial statements for 31st December 2016. This is what you're doing. In these financial statements, the revenue figure is 15 or 50 million. Okay, so that's the revenue for the year, the class of transaction revenue for the year. You can compare this with last year. So financial statement figure compared with last year. You can compare it with budgets and forecasts for 2016. So what happened was, the client had budgeted a revenue figure of 35 million, yet they have recorded an actual figure of 50 million. I am concerned revenue is overstated. Last year, their sales figure was 25 million. This year is 50 million. I'm slightly concerned how it has doubled all of a sudden. If there is similar industry information given, you can compare these trends with similar industry information. You can actually carry out your own rough calculations. So for sales, total units sold in the year multiplied by average selling price. When I multiplied the two, my answer is coming as 37 million. How have they recorded 50 million? Another example is, you can actually evaluate financial statements amongst element of financial. You can evaluate relationships among elements of financial statements. So for example, sales have gone up, but cost of sales have gone down. Now this is a relationship which seems slightly odd. I'm not saying it's impossible, but again, there could be, I have concerns about this trend. Another area that you can look at. You can compare the sales figure with the sales commission expense. You can compare sales with the VAT as well. I'm just giving examples. So another example is where you evaluate relationships for the same year, but amongst different areas of financial statements. As discussed earlier, you can actually evaluate relationship between financial and non-financial data. So payroll cost to number of employees, sales revenue to the volume as well. So again, this is not a list of analytical procedures. These are just examples. So when I compared the recorded figure with last year, with the budget, with industry information, I think the revenue figure is overstated. So another way of risk assessment is carrying out different analytical procedures at the planning stage. Please remember, and this is something I will refer to later, analytical procedures are carried out at 3 stages we are currently over here. So at the planning stage, these comparisons are done. Why? Let's look at the technical language. To assist the auditor in planning the nature, timing, and extent of audit procedures, they are used at this stage to get firm's understanding of the business and identify areas where audit resources can then be targeted. So you can say that as auditors, we identify risky areas by using the understanding that we gained, as well as by carrying out analytical procedures at the planning stage. Any questions regarding analytical procedures only? If you have any question regarding a previous stage, we will see if we have time at the end of the session. But if you have any questions regarding analytical procedures, please ask now. Only the analytical procedures. In so simple words, analytical procedures are where you carry out comparisons. You compare current year with last year, current year with industry information. I have only done analytical procedures at planning stage, Abdul. So Abdul Moiz, I have only done analytical procedures at planning stage. I will not be able to differentiate between the remaining two, okay? Because we haven't done those stages yet. It will be much clearer when we reach substantive stage. I'm going to minimize my chat box. If this is a question, just let me know. I always tell my students to actually remember it like this. Analytical procedure, compare with last year, compare with budget, compare with, industry information if it's available, compare with auditors' own predictive estimates. These are also called proof in total, and evaluate relationships in same year financial statements. So sales gone up, why have cost of sales gone down, etc., etc. Okay, so this is a flow chart that you can remember. So these are comparisons. Analytical procedures is just a very fancy way of saying comparisons. Do you have any questions regarding analytical procedures? Go on, say it.
Analytical procedures are done at planning stage only throughout the engagement.
All right. If you look over here, guys, just going to bring this up. Analytical procedures are done at 3 stages: 1, 2, and 3. I have only covered the first stage because we are still at the planning stage of audit. So I have not covered the remaining 2. I'll cover them tomorrow, well, the day after tomorrow and so on. But they are done at 3 stages. They are done at 3 stages of audit.
What is called the analytical procedures for non-financial?
Oh, so you compare number of employees with the payroll cost. So payroll cost is financial data, number of employees is like units. So when you compare the two, that's an example of an analytical procedure. Yeah. Okay. See, proof in total can be done for different areas. So I'm just going to bring up a slide over here. Okay. What's the screen changing? Okay, here you go, guys. All right, this is what's going to happen. Proof in total is actually just auditor's own workings. So, for example, for sales, my proof in total can be something as simple as units multiplied by selling price. For payroll, my proof in total is very interesting. This is my own thinking, okay? Last year figure, any new employees that have joined this year, any employees who have left, any increments that you give. Roughly, my payroll expense for the year must be this much. So for example, if I want to calculate my rough calculation working for payroll expense for the year, last year my payroll expense was 300. This year a new employee has joined who is going to be paid 30 for the entire year. An employee who was paid 5 has left. Total combined increment for the entire employee base is 15. My expense for the year should be roughly this much. So my rough calculation of payroll. Depreciation, you actually calculate it yourself. So as an auditor, you take down their depreciation policy, take their depreciation methods, take information about the assets, additions, disposals, and calculate your depreciation cost for the year, expense for the year. So your own rough working regarding that area, that is basically called proof in total. You calculate your own rough calculations and you compare them with the management's figure. I calculated depreciation, it is coming up to 500. The management has recorded depreciation at 230. So when I went to the financial statements in the P&L, my depreciation expense for the year is 230. They are obviously trying to understate their expenses because my calculations say 500. Why is their expense 230? So these are different examples of auditors' own estimates. They are called predictive estimates or proof in total. Is there any question related to analytical procedures? Yeah. Yes, yes. You are going to be asked to perform ratio analysis and compare with last year. After the comparison, you will have to find out risks. So you'll have to say your inventory days have gone up, which means inventory might be overstated. So yes, you will also be required to carry out proof in total based on information given. So I can give you information regarding my non-current assets and ask you to calculate depreciation. I can give you my payroll data and I can ask you to roughly calculate the payroll expense for the year. So absolutely, yes, you can be asked to conduct analytical procedures. Variances should be calculated on?
Or not?
Of course. Of course. See, I can't carry out risk assessment until I have the variances. So their budgeted revenue was 250. The actual is 700. How come? Why is there a variance? So of course you have to calculate variances. You can't find risky areas if there are no variances. Yep. All right. All right, guys. I'm now going to focus on a few things that are very relevant to F8. Now, up till now, what was I doing? If I just go back, I was covering the theory portion. So I was teaching how to understand the client. Sorry. I was teaching how to understand the client and I was teaching how to calculate audit risk. I'm done. I'm done with the technical language portion of this. I'm now going to actually focus on the questions that come up in F8 and the thinking that you have to do. Now, how is risk tested in F8? Number one, just give me 1 second. Just give me 1 second. Guys, I had a slight technology challenge, so it's sorted out now. Okay, I couldn't find my pen with which I had to write. Okay, so now I'm focusing on F8. Now, what happens in F8 questions? You will either be given a short scenario, or you will be given a short scenario along with information for ratio calculation. Either way, based on that information, you have to identify which areas of financial statement are at risk. So if the examiner says identify or discuss risk of material misstatement in financial statements, this is the thinking that you need to bring up. So, for example, I'm going to start with the first one. In quite a few of the past exams, the examiner writes that some of the inventory is kept at a third party. So what does this actually mean? Your team, so suppose you are the audit team, you were working on the audit of inventory. The inventory balance was, say, $100. So in the understanding, you were told that out of this $100, 80 is in your own warehouse, no issue, but $20 worth of inventory is with a third party. So you're the auditor, this is the story that I gave you. Now I have concerns about this $20. My first concern is, are you sure it actually exists? Does it even exist? So your first concern is, what if I'm making this up? If it actually does exist, is it actually owned by the client? So even if it is with the third party, are you sure it should even be included in my inventory? Maybe it's not even owned by me anymore. Even if it is owned, has it been valued at lower of cost and NRV? So the minute I tell you I have inventory at third party, you have concerns about this $20. You think this $20 might be overstated because it does not exist, or it exists but is not owned by the client. Even if it is owned, are you sure it should be 20 and not 18? So what is my thought process? When I'm given information, I have to find which areas of financial statement are at risk and why. So you would say inventory might be overstated because it might not exist, or it might not be owned, or it might not be valued at lower of cost and NRV. So this is how you think about chances of fraud and error or error in a certain part. Next, in the question, I simply told you I have a 5 million long-term loan. As an auditor, I have a list of concerns. Number one, has the finance cost of this loan been calculated properly? My first concern is the finance cost for the year. Please remember, it's only cost for the year I am focusing on. So is this class of transaction okay related to this 5 million loan? Please remember, the portion of 5 million which is due in the next 1 year, it has to be classified as a current liability. So is the split between non-current liability and current liability correctly done? So in the financial statements, has that split been done correctly? My next question, and I'm going to become more, it's becoming more difficult. Is there a loan covenant which has been breached? If a loan covenant has been breached, maybe you will need to pay a penalty. Where is the provision for the penalty? Or maybe the company has going concern issues. Has that been reflected in the financial statements? Was an asset held as security against this long-term loan? If an asset is held, has it been disclosed in the financial statements correctly? So simply by me saying that there is an existing long-term loan with the balance of 5 million, I have actually given you 4 risks. By the way, these are 4 separate risks. The first risk is the finance cost correct. The second risk in the balance sheet is the split between current and non-current correct. If there's a covenant which has been breached, do I need to create a provision for penalty? Is there an impact of going concern? If there's an asset held as security, does this need to be disclosed in the financial statements? All of this links your long-term loans to different areas of the financial statements. Another way of thinking, this is something I did earlier on as well. You are simply told that there's a lawsuit pending at the year end. My concern, as discussed before, do we need to create a provision if it's probable that I will lose the lawsuit, or a contingent liability disclosure if it's possible that I'm going to lose the lawsuit? So this case will the scenario will simply say lawsuit decision still pending. In the case, it is mentioned that they have spent 5 million on repairs and maintenance. I am concerned about IAS 16. The risk is that they might have incorrectly capitalized revenue expenditure, and therefore my assets are overstated. Again, please don't learn this. This is a thought process that you have to mention. They have capitalized development expenditure of 1 million. Are you sure? Remember, IAS 38 says that there's a certain criteria that has to be met for me to be able to capitalize this 1 million. The risk is my assets are overstated because maybe the criteria has not been met. During the year, they have acquired a brand. IAS 38 says that's fine, but maybe you need to amortize it if it has a finite useful life. All right? If it's infinite or infinite, however you pronounce it, it's fine, but otherwise it needs to be amortized. Has that amortization been done? Receivables are struggling to pay. I have concerns that they might be irrecoverable, therefore my receivables might be overstated. Redundancies have been made. Are you sure I have included the provision for redundancies? These are areas. See, I can't give you a list of all the areas that can possibly come up. However, this is the thought process that should come to your mind. The minute you have some information given, you try to think which part of the financial statements is at risk. I will not give you marks until you link them to the financial statements. So in your answer, I need to see, inventory is going to be overstated, or provisions are going to be understated, or a disclosure is going to be missing, or maybe classification in the SOFP is incorrect. So no marks for risks until you use a part of your financial statements to support your answer. Again, I've not done risk response yet. I've only covered the risk. In your handout section, what I did do was I went through all your past exams and I have made a document. So this is a document that you have access to in your handout section. Please take a minute to have a look at this document. So if it says fair value, possible risks of material misstatement, don't read the response right now. If there are indications of provision, possible risks of material misstatement. If the skills, the board is unskilled, possible risks of material misstatement. I want you to all please just take a look at the first few areas to get understanding about whether you're comfortable with how to word your answers. So if you notice, in each part, some portion of the financial statement under overstatement is mentioned. You have about 3 minutes, and then I will look at the questions. I'm going to look at the questions in about 2-3 minutes from now, okay? Quickly have a look at this, and then I'll see what questions you have. All right, guys, I'm going to now have a look at the questions that have come up. Yes, that's correct. Your loan covenant are conditions attached to loans. Repeat the first example of inventory. Fine, I'll do that just now. Are these procedures analytical or substantive? All the examples that I gave you right now, none of these are procedures, guys. These are not analytical procedures. These are not substantive procedures. These are risks. So areas of financial statements which might be at risk because of the information that was given to me. So these are not procedures at all. Yes, Talha, you can actually quote under overstatement by linking the assertion to it. We have not done the word assertion yet. In the exam answers, does it matter if you phrase it as per IS-38? Tariq, you don't need to mention the exact accounting standard. The name is not important, the wording is. So you could write that the relevant accounting standard or the reporting framework says that development expenditure can only be capitalized if the criteria has been met. The risk is that it has been incorrectly capitalized and therefore assets are overstated. So the language needs to be still there. You need to write the wording, not necessarily the name of the standard. The table is, Hamza, the table is not in the knowledge summary. It is separate. It has been uploaded separately. The handouts have been uploaded. You should be able to download them. The third column, Arsalan, the third column is incomplete because you have to do it. This is not a part of your syllabus. These are examples. These are examples for you to think in terms of. Please, please, please do not learn this. I should not have given this to you. Don't learn this. We have not done the word SN. We have not done the word assertion right now. We haven't done the word assertion. Someone said it, so I used it. Forget it. We'll do that tomorrow. Vakas, the wordings are exactly the way I said them. Mention the accounting treatment and write the risk is this treatment has not been done, right? So IS 16 says that revenue expenditure needs to be expensed off. The risk is this has not been done and therefore assets are overstated or expenses are understated. So accounting treatment and the risk that the accounting treatment has not been done. Or simply writing the risk is that finance cost has been incorrectly calculated. So that's for Vakas. Mohammed Talha, we are going to explain the audit risk. No, I think don't write detection risk unless you're very sure it's detection or control or inherent. Okay, so unless it is specifically mentioned that you need to tell me whether this is inherent or controlled, don't classify it. Just classify it as risk of material misstatement. Detection risk will obviously be different because that's the auditor's work. Walid, if you have a look at the past exam answers, because you have to read the answers, then you would know how to word them. You can write them as a table or a paragraph or both. How do we respond to the risks? On this, we haven't done risk responses yet. I've just covered the risk element. We have not covered the risk response yet. All right. I'm just going to minimize this. And Hafiz, Mohammed, someone, I'm going to write down one answer. We can write detection risk when the, detection risk comes, Umair, you're right, detection risk is when you're doing audit for the first time, etc. Okay, so I'm just going to go back to my slide. Someone asked me to revise inventory, so I'm going to do this and then maybe also write a sentence. All right, guys. Very quickly, inventory at a third party. So there was a past exam question where it said that the client told you that some of the inventory was at a rented warehouse. So it's not in your own warehouse. Some inventory is based at a rented warehouse. My concern is that is the client telling the truth? Now, my first question is, are you sure this inventory actually exists? So this $20 inventory, does it even exist at that rented warehouse? If it exists, is it even owned by the client? So does the client even have a right over this inventory? And has it been valued at lower of cost and NRV? So 3 separate risks which could lead to overstatement of inventory. So this was the risk related to inventory at third party. Now, if I word it, you can just write that some inventory is in rented warehouses at a third party. You remember how to write third party. The risk is that this inventory might not exist, therefore inventory might be overstated. Until you give me this one last line, you get no marks for this. So you have to tell me that in the financial statements, inventory could be overstated because it might not exist. So this is the best way to actually cover risk when you're writing it down. I'm going back to, is there any other question, Ms. Abid, that I need to look at? All right, guys. I'm now moving on. Guys, could you please just make sure that we keep thinking where we are. We are still over here. We understood the client and we are still working on the audit risk. We covered the technical aspect of audit risk and then we moved on to discuss how this can be tested in the exams. If you are unable to download this handout, because I did see some of that, we'll upload the handout again at the end of the session today. All right, guys. I am slightly concerned about those who are asking for responses when I was covering risk. This basically means you have rote learned concepts, you don't actually know what they mean. So please pay attention. At the planning stage, we identify audit risks and we plan their responses. That's what we have to do. So I'm going to reword it over here. I am going to, okay, why is this not erasing? Okay, I'm going to identify audit risk. So well, you could say you could evaluate audit risk and then plan risk response. So you have a complete picture when you get these slides. Okay, so you have to evaluate audit risks and then you have to get the risk response. So let's start, guys. Okay, the risk was, I want you to all please pay attention. You were concerned that inventory might not exist. I need you to all please open up your chat boxes. I'm asking a question now. Your risk is that this inventory might not exist. What is your plan? How will you try to find out whether this inventory exists or not? What's your plan, guys? Plan a response. Physical inspection? Absolutely right. So your risk response is, your plan is. So as an auditor, my plan is I will later on go and confirm by physically inspecting it, or I can actually confirm from the third party. Who is this? Very well worded. Very well done. So I will give you marks for writing physical confirmation as a plan or writing to the third party as a plan. Either answer is the right plan. Move on. Your concern was this inventory might not be owned by the client. What's your plan, guys? What's your plan regarding confirming whether this inventory is actually owned by the client? Yes, you can actually check the purchase evidence, ownership documents. You can look at or maybe write to the third party. What else answers am I getting? Yeah, absolutely right. You're absolutely right. In order to ensure that this inventory is actually owned by the client, you need to verify supporting documents regarding this $20 amount. Very good risk response. Next one, guys, the most difficult one. I am concerned this inventory has not been valued at lower of cost and NRV. What's your plan? How will you check or ensure in the future that this inventory has been valued of lower of cost and NRV? Very well done. Guys, pay attention. You confirm the cost from the supporting documents, you confirm the estimated NRV, and you ensure it is recorded at the lower of the two. Again, guys, I'm just going to, okay, very simple. You have concerns that the finance cost might not have been calculated correctly. What's your plan? How will you confirm it's been calculated properly? What will you do, guys? Bank statement is the wrong answer. Finance cost for the year. Has it been calculated? Yes. Reperform calculation. Very well done. I ask for the loan agreement. I'm going to recalculate the finance cost for the year. So your response is, I'm going to get the agreement and recalculate it myself. Absolutely, proof and total can be done as well. Why do you guys worry about risk response? You know everything. Why are you worrying? Okay, last difficult question, guys. This is a huge test, sometimes at P7 level as well. Come on. If an asset is held as security, listen to my question very carefully. Financial statements need to have a disclosure. The risk is that this disclosure might not have been given. What is your response? What is your plan? How will you confirm this? Confirmation from where? No. Hang on. Come on, you're accountants. How can the bank tell you what is written in the client's financial statements? I have one right answer. I saw it. Someone wrote, check the disclosure. Who was that? Discuss about the disclosure. Umair, that's right. Someone else also wrote, check the disclosure. Check the disclosure. Who was that? Ghulam was. So simple, guys. You are concerned. Actually, I'll give you the highest level answer. Is there an asset held as security confirmed from the loan agreement? If there's an asset held as security, you review the financial statements to see if the disclosure has been given. Or you can ask the management whether the disclosure has been given. So guys, before I take questions, why do you worry about risk response? Risk response is simply your plan for the future about this area. You know what the risk is, but what is your planned response? If you look over here, this is from an actual past exam question. The finance director is planning to capitalize the full 2.2 million of development expenditure. In order to be capitalized, it must meet all the criteria under IS 38. That was the risk. The response is a breakdown of the expenditure should be reviewed and tested in detail to ensure that only projects which meet the criteria are included as an intangible asset. So you were concerned that criteria might not have been met. My response is fine. In the future, I'll go and check the criteria. The examiner has said that students do not write the responses correctly because they think response means what the management should do. Please no. Response is the auditor should. So in one of her examiner reports and in a technical article, she has said, please start with the auditor should. Risk is this might have happened. Response is the auditor should do this. So that's how you tackle risk and risk response. Any questions, guys? I am now finally done with the, where were we? Hang on. With just the B portion. I'm just done with A and B up till now. We've done understanding the client and we've done audit risk and risk response. Before I move on to materiality, questions regarding risk response, guys. Questions regarding risk response only. Of course not. Vikas Afzal, absolutely not. Disclosure has nothing to do with the double entry that was given. Please be very careful. Asset held as security. In my balance sheet, I have a building, which is my asset, which is perfectly fine. However, against that building, I've taken a loan as well. So accounting standards say there's no separate double entry for that. You just have to put this in notes to the accounts. So you just need to make sure that the disclosure is there and it is adequate. Hemraj Punjabi, the bank can tell you if assets are given as security, but they cannot tell you whether the disclosure is given or not. My risk was whether a disclosure has been given. Yes, Ghulam was, you can say that the response is the auditor's recommendations regarding what auditor should do. It's not a recommendation. Please remember, it's not a recommendation, it's my plan. A risk response is my plan for the next work that I will do on this area. I have no idea what you're talking about, Umair Latif, because I've not covered this topic. Inspection and inquiry has not been covered right now. No, Wajahat, you do not need to mention the name of the IAS. There are no separate marks for that. Very good question, Akasha Deen. The difference between responses and procedures is absolutely none. Procedures are more detailed and responses is a summary of the procedures. So in F8, you can use some words from your procedures to write as a response as well. I'll tell you something. When I take face-to-face classes, I always teach risk response after substantive testing. I never cover risk response at planning. I tell them what planning is, response is, and then I move on. Because actually, the summary version of the procedure is the response. So very well identified. If question says it's manufacturing company, Bilal, I am slightly concerned about you assuming they have a lot of work in progress. So no, if it's a manufacturing company, don't simply jump to work in progress. And work in progress has risk of material misstatement, that's separate. That calculated complex calculations that might not have been done correctly. Detection risk is that the auditor might not have the expertise to find problems in work in progress. That's something else. Okay, so be careful. No, Milena, no. Actually, I think some of the students, most of the students are sending in their questions privately. So not everyone can see the questions. Umair, yes, inquiry and inspection are two separate things. We will cover both in 2 days. Yes, Mohammed Ilyas, absolutely yes. We can send the third party a confirmation letter to confirm the existence of inventory. Absolutely yes. Assets, Nasrullah Khan, assets held as security. You would say they have a long-term loan. If they have assets held as security, the risk is that a disclosure in the notes to the accounts might not have been given. Okay, so risk that a disclosure has been missing. Osama, responses for an incorrect sales figure, it depends on why do you think it's incorrect. If it's a simple manipulation, so for example, it says the directors are given bonuses based on the sales figure. Okay, the risk is that sales could be manipulated and therefore overstated. The response is we will increase the testing in the sales area. That's it. So increased testing is a general response when there are chances of manipulation or errors in a broader sense. We have not done SN, we have not done the difference between a strategy and response yet, plan yet. If you go back to my flow chart, I have not even finished the strategy right now. When I finish strategy, then I'll talk about the plan. Umar, risk responses, yes. Risk responses, Umar, are the abridged version of substantive procedures. The answer is not directly a yes, it's just it's a combined version of substantive procedures. Talha, I can't do that. No. When you do pass exam questions, you should be able to do that. I will have to make up financial data, and writing that financial data will take 10 minutes. So no, I can't do that. Listen guys, you need to attempt every single question which is there in your past exams. Every single question. And when you attempt those questions, you have to read the answers. So when you read the answers, you will come up with all the possible areas she can test you. Ehsan Habib, you can either use the assertion or you can use simple language. The examiner will give you marks either way. No, Milena, you can get marks if you use check. Just explain. You can check the invoice to confirm the name. That's a complete sentence. You can still get it as long as you write the full sentence. What are you checking and why are you checking it? Umar, you can't write substantive procedures. Write the summary of the substantive procedures. No. Foreign IS 21 is not examinable in FH. So no, foreign currency transactions do not come up in FH. Only your F3 accounting knowledge is tested in F8. Sona Salim, the response for the split is you go to the balance sheet and you check the split. So first find out which portion or how much of the long-term loan is due in the next 1 year. Then you go to the SOFP and check it has been correctly split. I'm not going to be able to give you my WhatsApp number, unfortunately. A response should be about 2-3 sentences. So in this, about 2-3 sentences. Yes, I will give you the study plan. It's actually, you already have it. I'll tell you how to use it. I am not going to supply past papers. The papers are on the ACC website, guys. Yes, loan covenants, Mohammed Ilyas, absolutely. So I went to the bank. I took out a long-term loan. Attached to the loan is a condition that unless you have repaid all of this loan, you can't take out a new loan from any other bank in the world, a loan covenant. Or a covenant which says that at all times your inventory should be, the balance should be a minimum of £1 million. So any conditions that can be attached to the loan. The name of the examiner, it doesn't matter, Maz, what the name of the examiner is. And no, that's the wrong name, by the way. I will tell you which past exam papers to use. Bilal. Bilal, this is a very general response. You can't write it in anyone. Wajahat, no. If a loan repayment is missed due to some reason, that does not mean the company will shut down. Please remember, going concern is normally a combination of factors. Danish, walaikum assalam. Response for a loan covenant, Yusra, you check, look at the loan agreement, see if there's a covenant, check if it has been breached, and if it has been breached, then find out the fines that you will have to pay. There are no, see, you don't, for the, don't separately, Nasrullah Khan, don't separately prepare for OT cases on Section A. Just do full form questions. You should be able to do Section A automatically. Guys, all of you who are asking me for individual responses, I'm not going to give you individual responses to individual risks because they're all there in the past exams. You attempt the past exams and therefore you find the responses. I am not going to give you responses to individual risks, okay? Danish Aziz, I think this session is being recorded. You can write to ACCA to get a link to the recording of this session. Bilal, that's correct. By the way, although I'm not giving individual things, Sameed Mahmood, subsidiaries, group audits are not a part of F8 syllabus. I have no idea what a floating asset is. Loan covenant on a floating asset? I know what you're trying to say, but that's not it. That's basically related to inventory. That's not a floating assets. SN Abbas, the answer is every single one of them. Every single one of them. Every single past exam question has to be done. All right, guys. I'm going to. All right, guys. This is extremely important, guys. Come on. I need you to pay attention. I'm wrapping up now. I'm wrapping up. You need to stop typing for the next few minutes. And please pay attention. This is extremely important. Okay. If I go back over here, the planning stage, tomorrow I'm going to cover all these areas, okay? So we have only done the first part of planning, which is understanding the client and audit risk, okay? So we have, you can look over here, it says exactly the same thing, but we've only done topics up till here, which is up till here. up till examples over here. Okay. Now, all right, those of you who are still typing in questions, come on, guys. Pay attention. There is something I need you to see. We're nearing the end of the syllabus, the session today, so you need to pay attention. Okay, now up here on the screen, I've opened the knowledge summary. So knowledge summary is 138 pages of the entire F8 syllabus that you have to do to pass the exam. Now keep looking at the screen. First topic was assurance engagement. There's a table on difference between reasonable and limited assurance engagements, external audits, etc., etc. You cover all of this, and this is what you were asking me, guys. This. So after you've covered up till page 6, these are the questions that you can now attempt. Then the next topic that we haven't covered, we will not do, is fundamental principles of ethics and threats. Very simple language, very exam focused. Once you finish all of this, these are the questions that you do for ethics. This is what we did today, guys. You know, we did client acceptance procedures. Once you've covered all of this, we did preconditions, agreeing the terms of engagement. You can now attempt these questions. Then we did the planning stage of audit strategy. People were asking me questions, examples of inherent and controlled risk. They're all, see, inherent risk examples, control risk examples. They're all here. I've made this summary with a lot of effort, so trust me, all your concerns will be covered. Analytical procedures, examples, ratios. Once you've covered all of this, you can actually, today, you can cover all of these questions. So at the end of each topic, references to the past exams are given. You can actually attempt as many as you want from these questions. So today, maybe try and attempt September 16, question number 18, A and B. So if you ask me for a homework for today, it is right up here on the board. You can either attempt this question or this question in one of these two. You can attempt, actually I think it's better if you do part A because it's the latest question, then we can see how well you perform as well. Because again, this is one of the latest ones, you will have a much better idea whether you understand what we did today or not. So your homework for particularly today is this one question, but you can actually attempt all of them. Okay, so this is how the summary has been made. You read until this page and then you attempt all these questions. Any concerns? If you want, you can, again, these are areas that you can talk about. I do know some of you were asking for email address for questions. I'm not really sure how frequently I'll be able to answer them. Knowledge summary of enough? Yes, yes. Please forget all your textbooks, everything, and the focus on the syllabus. Yes, Misbah? Yes, Umair? Knowledge summaries for the entire syllabus. So all the topics, you know, some of you were concerned about not being able to differentiate between familiarity and self-interest. You had concerns about ethics. All of that is mentioned in the knowledge summary. Danish Aziz, the screen right now on the board, all these questions relate to audit risk. So, you know, all these questions are from audit risk. Yes, Mohammed Usman asked a question. Is it better to do substantive first and then do questions of risk response? Yes, I would say it works. I think it works better like this. Yes, I would say yeah. I think preparation becomes much easier because once I've done substantive testing, then it's very simple. Then it's not very difficult. Can we quantify the risk, Muhammad Ali? Don't quantify it unless the information is given. So if it says inventory is overstated by 2 million, then you can mention it. Otherwise, it's not needed. Thank you so much, guys. Thank you for being such an interactive audience. Oh, I do have a few more questions. So all is knowledge summary, do past papers, which you will mention. Yes, Ghulam Ghaus, that's it. You are unable to, Danish Aziz, you are unable to download knowledge summary? No. Sohela Ali, the revision kits, you can just use for the answers. Revision kits have the same questions, right? I've just made them more topic focused and more part focused. So they have the same questions. You can use kits or the past exams, but answers should be from the revision session, from the actual answers. There is no difference between describing audit and explaining audit. It's the same thing. Right, I'm slightly concerned about the Sarah Mohammed. You want to give feedback? Please don't give it to me if it's bad. I'm not, I don't know where they get the documents from. I'll get in touch for the documents as well. All right, guys. I can now confirm that you can download the documents as well from wherever you've logged in. In addition, you will also get an email from ACCA, which includes all the documents that have been sent. All right, so you should be able to get an email as well. Muhammad Usman, you can't see the questions that are asked because students are asking the questions privately, if I'm not wrong, right, Ms. Abid? Yeah. So students are actually asking questions privately. Sundis, you are going to be emailed the material by ACCA. I will make sure you are sent the material today. Thank you so much, guys. You have a good day for the rest of the day, and I will see you tomorrow. I will see you tomorrow. We will finish off planning. By the way, I'm also doing a question in class during the session tomorrow. So tomorrow, just one last thing, guys. Okay, don't log off. One last thing. No logging off, please. I'm also going to eventually upload this. You should see this as well. The plan. Where is the plan? Is the plan here? All right, guys. Doesn't matter. Today you will also be emailed the webinar plan, so you know exactly which topics we will be covering. It mentions which substantive areas, which control areas we'll cover, along with the questions that we will attempt for each topic. Okay? Because I am going to do a risk question tomorrow in class, in the webinar. So I'll see you tomorrow. Thank you so much, guys. We will email you the plan today as well. Thank you. You have a good day. Allah Hafiz and bye-bye.